Good morning, friends and traders. It is Thursday, June 15th, 2023. Welcome to the Market Prep. I am JD, filling in for Mr. Hoagland, who is taking some well-deserved time off down in sunny Florida. As always, thank you for choosing to spend your time with us this morning. It's always our goal here to apply good and accurate context to the markets, as well as sound risk management. Remember, hit the lucky like button. Feel free to share your comments and feedback and questions in the chat. We do appreciate and encourage all forms of feedback. If you haven't already, go ahead and subscribe to our YouTube channel so you get those wonderful updates every time we go live. All right, moving on. Well, I'm sure a lot of you were around for the Fed announcement yesterday, so I'll just do a quick recap. The FOMC, the Federal Open Market Committee, voted to keep rates unchanged for the moment, but hinted at possibly 2 more rate hikes in the future. Their goal right now is just to assess the data they've already gathered over the last 10 consecutive rate hikes at their last 10 meetings, and kind of see how their plan is done to in their efforts to quell the rapid inflation that we've been seeing. We did see some signs of easing inflation in yesterday's PPI report. On a monthly basis, producer prices fell 0.3%. That was for the fourth drop in 6 months. That was according to CNN. As far as today's economic calendar, we had a few things out already this morning. Jobless claims, Philly Fed Manufacturing Index, retail sales, Empire State Manufacturing Index, and import-export prices. Let's check in on those right now. Jobless claims came in at 262,000 over a consensus range of, or over a consensus of 248,000 and a prior revision of 262. Philly Fed Manufacturing Index came in at minus 13.7. Compared to a consensus of minus 14.5 and a prior of minus 10.4. Retail sales came in month over month at 0.3%. Empire State Manufacturing Index came in at 6.6%. Pretty big jump. Consensus range was minus 23.5 to minus 9.6. And import-export prices. Import prices month over month dropped 0.6% and year over year dropped 5.9%. Also on the economic calendar for today, we have industrial production at 8:15 Central Time, business inventories at 9 Central Time, and the EIA natural gas report at 9:30. Let's see what happened overnight. Overnight, stocks in Asia closed mostly mixed. The Shanghai Composite closed up 0.74%. The Nikkei closed down 0.05%, and the Hang Seng Index closed up 2.17%. Currently, markets in Europe are trading mostly lower right now. The DAX is down 0.76%, CAC is down 1%, and the FTSE is down 0.01%. And stocks in the U.S. are currently a little mixed also. Indexes Dow Jones down 0.68%, NASDAQ up 0.39%, and the S&P is up 0.08%. We have the VIX sitting back above 14 at 14.14 right now. The yield on the 10-year is at 3.788%, and the U.S. dollar index is right at 102.85, hovering around 3-week lows right now. All right, let's take a look and see who's in the room. Good morning, everybody. Shaw, first in the room. Good morning. Caprice, Dr. VJ, Dan Trader, Tim Vyers, Bill Phillips, Casey, Stephen Carlson, Travis Chingo, Jason Lewis, Rusty Golfer, Shane, Henry, James, Marcelo, Bear Goes Long, Sarah Hall, Shai T, Trading Research, Anise, thank you. Good morning, everybody. Thanks for joining us and welcome. Now, before we get into the charts, one quick announcement about our new, we have a new product update here at Topstep. We've added 12 new products to our list of permitted products. I'm happy to announce that if you are trading in a trading combine or a funded level account, you'll now be able to trade micro Bitcoin, micro gold contracts, and drumroll, the micro crude oil contracts. I know a lot of you have been waiting for that one. Keep an eye on your inbox this morning. I believe an email went out at 7 a.m. Should have gone out early. Probably went out already. There's a full list of all 12 products on there for you. You can take a look at that, or we have a article from our blog that you could also take a look at. Everybody see that? All right, just dropped it in the chat. UG, what site do you get your global markets info from? Those come straight from CNBC. All right, with that, we've said good morning. No questions in the chat. All right, let's dive into some charts here. Here we go. Let's get started with our daily of the September contract, E-mini S&P 500. In all, yesterday, ES traded in a 56 handle range. Settled at 44.18.5, up 1.75 points, basically unchanged on the day. And all the September contract traded about 2.1 million contracts and added 145K in open interest. The roll is nearly complete. The June contract lost about 130,000 in open interest yesterday, and tomorrow is the last trading day for the June contract, so keep that in mind if you haven't rolled already. So this rally powered right through our weekly kickoff high here earlier this week, which Hogue has explained in the past are more of inflection points than areas to be used as support and resistance. So here we are, well above our weekly kickoff high, and all of these moving averages here. Momentum is strong to the upside. Volume is steadily increasing, and a lot of analysts have gone public saying that the ES is now in a new bull market territory after rallying 20% from the October lows. We're seeing a little bit of weakness this morning right now, but hangover days can be expected after a couple of days of fairly big economic data being reported. Just a quick note, I just realized I didn't really go through my chart setup. If you've never joined me for a market prep or any other broadcast where I'm sharing charts again, I keep my charts pretty simple and clean. I have a couple moving averages here. This black line here is a VWAP. The green line is a 10-period moving average. 10-period simple moving average. This blue line is a 20-period simple moving average. I apologize. These are exponential moving averages. This red line is a 50-period simple moving average, and this light blue line is a 200-period simple moving average. I also have some volume bars down here and a slow stochastic oscillator for gauging momentum. That's it. I draw lines and whatnot. I mark up my charts throughout the day, and then I usually clear them out at the end of the day and start over fresh every morning. That's my process. I'm also a big pen on paper kind of guy. I keep my note cards here. I also have my trading journal that I mark up every night when I'm done. That's kind of how I do things. Let's zoom into this is a 4-hour chart of the September contract. Now this is a nice healthy uptrend going back to this low here in March 24th. Higher highs, higher lows the whole way up, just a textbook rally, sort of towing this line around the 10-period or 20-period moving average, which I said is represented here in blue. And it looks like we'll be testing it again. Well, we tested it again just a little while ago. We're hovering back around VWAP in that 10-period moving average right now. This chart is telling me that the dips are being bought right now, and they have been consistently for the last couple months. So that's what I will continue to do until this market tells me otherwise, you know. Here is our 30-minute chart with some simple volume profiles. Quick note on yesterday's price action. We took out Tuesday's high early on in the session and sort of melted through Tuesday's low as the FOMC announcement came out. Going so far as to test Monday's regular trading hours high. Then we ended the day drifting right back to settlement, close out the day inside range, inside value from Tuesday. Right now, overnight inventory looks to be just a bit short right now. We're still trading inside of value. We dipped outside of value, but still in range, back inside value right now, just above yesterday's value area low. I mentioned that hangover day a minute ago, and things are kind of setting up for something like that right now. After 5 days of higher closes, we could do for a little sidestep, maybe sideways to lower price action. That said, I'm not keen on diving right into this one early on. My temporary bias is to the upside, which it has been. So my initial tendency will will be to look for areas to buy, but I'm also really not looking to get run over. This turns out to be sort of a correction type of day. So I'm going to hang on, sit back for the, I should say my plan is to be patient with the ES this morning. This is the primary market that I trade, and I just don't want to get too far behind too early on in the day. So I will wait through the first half hour of regular trading hours, just watching the tape, actively observing. That's what we really call it around here. Then try to make a determination of what direction, or I guess sort of weigh the odds of trading counter to my initial balance and possibly initiating short position. But we'll play that as we see it. Let's jump over to crude oil real quick. Here's our daily of the August crude oil contract. Yesterday, the August contract traded in a $2.38 range, traded 210,000 contracts, and added just over 4K in open interest. There's still some decent volume in the July contract, but the bulk of the open interest is now rolled into the August contract. The August contract, excuse me. So here we've had some nice consolidation in the last couple weeks. Fairly obvious just looking at it, sort of playing both ends of this weekly kickoff range. I don't think these weekly kickoff levels have moved too much in the last couple of weeks, nor should they until we start seeing some direction. Right now we're playing around the lower end of that weekly kickoff range, even after that OPEC announcement announcing more production cuts at the beginning of the month. I also read that China's demand for oil has increased by 840,000 barrels a day. That might play into our market somehow. We see some decent volume here due to the roll. We're trading below all of these shorter term moving averages, hovering right around the VWAP right now. Momentum looks to be pointing to really lower prices right now, but this market is visibly range bound for the moment. Zoom into a 4-hour chart here. So this market is just bouncing around, testing previous highs and lows, teasing us with false breakouts, pretty much putting the squeeze on anyone with a long-term bias trying to trade it right now. This market has just been a blessing for skilled range traders. Let's go back to let's go into our 30-minute here. So here's the 30. You can see we weren't quite able to take out yesterday's overnight high during regular trading hours. Came real close, just couldn't push through. Then it just sold off the rest of the day. It closed on the lows. We spent most of last night trading inside of range, but just below value, below yesterday's value area low. Right now we are moving back into value. We got the open in just a minute here. And again, opening inside of value, I mentioned this with the ES. Opening inside of value, it's kind of a cue for me to stay patient and wait for some direction, though I am going in with an initial bias to the upside just based on the overnight price action. This high from yesterday and this failed test of the weekly kickoff low has me thinking of looking for buying opportunities this morning. Overall, like I said, yeah, this weekly kickoff low and this value area high from Monday held strong overnight. So this overnight low will be my line in the sand for today. If we happen to get back down there, might be a decent support level again. If it breaks through there, could be a good opportunity to sell some new lows for a quick couple ticks. Let's take a look at our NASDAQ chart now. All right, here is our daily of the September NASDAQ contract, and in all the NQ traded in a 267-point range yesterday, settled at 15,199 and a quarter, up 100 points, which is noticeably stronger than the ES. Can't see the left edge of your chart. It cuts off at the ask price. Maybe our producer can make a quick adjustment on that. 1 second. Hope that's a little better. All right, where was I? Open interest. We saw volume in open interest. We saw 732,000 contracts traded in the September contract, and also add 33,000 in open interest. Akin to the ES, tomorrow is the last trading day for the June contract in the NASDAQ. So keep that in mind if you have not rolled forward yet. Excuse me. So we've had a nice little rally the last 5 trading sessions, 5 consecutive higher closers. Yesterday we broke out above our weekly kickoff high, closed above weekly kickoff high, and then we have a healthy increase in volume while the roll is going on too. We're trading comfortably above these moving averages, and momentum is still pointing toward continued strength. That's a nice healthy rally we're seeing right now. Similar to the ES again, we're seeing some weakness overnight. Again, to be expected after a few busy days, and we've settled right back to our weekly kickoff low, which matches up nicely with our VWAP right here also, which is this black line. Here is our 4-hour chart. Again, this is a nice healthy uptrend going back to this low from May 24th. Higher highs, higher lows the whole way up, just a textbook rally, sort of towing the line around these 10 and 20 period moving averages here, and the occasional test of the 50 period moving average. And it looks like came just shy of testing this 20 period moving average a little while ago. But this chart is really telling me that, again, the dips are being bought, and it looks like we could be settling into a little period of consolidation short term. They say that even in the strongest bull markets, prices will tend to spend roughly 70% of the time trading sideways. So knowing how to play the ranges is really just as important as knowing how to play the breakouts, even in trending markets. Here's our 30-minute chart. So not quite the same as yesterday's ES price action. We did take out Tuesday's high early on in the session, but couldn't quite take out Tuesday's low after the Fed announcement, and then it just ripped higher to close out the day on the highs. Overnight inventory is short currently, getting shorter. It had a nice little pop a few minutes ago, but I would say overnight inventory is pretty short right now. When prices open up inside value, like I said, it's typically a good idea to stay patient, wait it out just a little bit until the market has found some direction. With all these dips being bought in the NQ, my initial bias going into the day is to be long, and I want to wait for some buying opportunities. But also a move below these recent lows could trigger a little stop run, so I'll be on the lookout for that as well. Overall, with the exception of this overnight weakness, there's not a whole lot telling me that it's a good idea to hold on to a short position for very long in this one. But again, a move below these lows from yesterday and Tuesday, or a move below Monday's high, and I will start to reevaluate my trading plan for the day. But initial bias is looking for buying opportunities right now. Large options expiration today. Yes, tomorrow is the quad witching. If you take a look at our weekly kickoff email, there's a little bit of information in there on that. All right, let's take a look at the gold. I'm only going to cover the 4 markets that I mainly track: the S&P, NASDAQ, crude oil, and gold. Those are what I am most familiar with. I could talk about the other ones, but I can't go into them in depth as Mr. Hoagland does. He tracks those markets pretty heavily throughout the day. But anyway, here is our daily chart for the August gold contract. Yesterday, the August contract traded in a 21-point range, settled the day at 1960.1, up 10.2 points. The August contract also traded 197,000 contracts and lost just under 2,000 in open interest. Now, when I look at this chart, I see another market kind of struggling to find direction. We've been range bound since mid-May, but now after 4 consecutive lower closes, we're seeing a little test of the lows this morning. This light blue line here represents a 200 period simple moving average. We dipped below that, and we're hovering right around our weekly kickoff low right now, which, similar to crude, hasn't really changed that much in the last month or so. Let's zoom into our 4-hour. This just looks like textbook consolidation to me. We finally tested this low from late May back here. And we have buyers stepping in around our weekly kickoff low this morning. Tested it. 3 tests a weekly kickoff low, buyers stepped in every time. With the US dollar trading at 3-week lows right now, I'm kind of on the lookout for a false breakout here, which we might have already gotten early this morning. Let's take a look at our 30-minute. So here we see our overnight inventory is short, gapped open lower to start the day, and we're just kind of hovering right back above our weekly kickoff low again. If this gap isn't filled in a timely manner, we're starting to make a push there right now. But if it doesn't get filled in a timely manner this morning, then my temporary bias will shift to the downside. To the upside, a move into value from yesterday will tell me that we can expect some more of the same, at least in the short term, and maybe a move back to test yesterday's point of control up here, which also lines up pretty nicely with these previous points of control from Monday and Tuesday. Overall, I am not here to fight this market. There are signs of weakness here, and selling new lows could be the play today, but I will be keeping my eye on this gap early on, and I think our weekly kickoff low looks like a decent line in the sand. Maybe using that as our inflection point, long above, short below. That is how I will be looking at the gold market today. All right. That is it for my chart analysis. Well, that's all I've really got for you this morning. Thanks for joining me while Hogue is out. I'll be back in with you tomorrow. Hogue is expected to be back on Wednesday of next week, I believe. And another announcement, since Hogue is out today, Make Hogue Money session has been put on hold. Repeat, no Make Hogue Money live trading session today. But hang in there for the Limit Up podcast at 3 o'clock this afternoon with Jack and Dan. That'll be live, broadcast live on YouTube. And I will be sitting in on the coach's office hours later this morning. So if you have intentions of joining that, I will be there with our guys Eddie Horn and everybody else. Let me just check the chat one more time. Everything looks to be in order. I'm glad the charts made it back. Thanks to our producer Holden for a quick fix on that. Much obliged. And I guess that was it. Thanks again for your time. Have a great trading day, everyone. And I look forward to seeing you again tomorrow morning. Have a great day.